Hi, welcome to the OMR Stock Market Learning course, Level 1 Beginner. This is Module 1 Stock Basics, the perfect starting point for anyone curious about the stock market. Let us begin your journey toward financial confidence. What is a stock? A stock represents a small piece of ownership in a company. When you buy a stock, you become a shareholder, a part owner of that business. Why do companies issue stocks? Companies issue stocks to raise money. This money helps fund their operations, launch new projects, or expand the business. Why do people buy stocks? People buy stocks to grow their wealth. They can earn money when the stock price rises or through dividends. Dividend is a share of the company's profit. A real life ownership example, if you own 10 shares of TCS, you actually own a small part of Tata Consultancy Services. That's the power of investing. Types of stocks. Let us explore different kinds of stocks you will hear about in the market. Common stock give voting rights, while preferred stocks provide fixed dividends. Blue chip stocks are large, trusted companies like TCS or Infosys. Penny stocks are cheap but risky. Growth stocks offer high potential but fewer dividends. Dividend stocks provide regular income. It is ideal for passive investors. Which stock types suit you best? Let us know in the comments. Stock returns. You make money from stocks in the two ways, capital gain and dividend. Capital gain is buy low and sell high. Dividend is a share of the company's profit. Stock ticker symbols. Every listed stock has a unique shortcut like TCS INFI. These are called ticker symbols and are used to track them in apps. What moves stock prices? Stock prices rise and fall based on demand and supply. News, earning reports, and market sentiment all play a role. How to track stocks? You can track stocks using apps like Zerodha, Grow, or In the Money. Create watch lists, set alerts, and follow company performance. Risk in stocks. Stock don't guarantee returns. Price can go up or down. That's why diversification and risk management are important. Ownership right. As a shareholder, you get the right to vote in annual general meeting, the right to receive dividend, and the right to benefit from price growth. Market capitalization. Companies are also classified by size, large cap, mid cap, and small cap. Market capitalization means the total value of a company's shares in the stock market. It is calculated as share price into total shares outstanding. Large cap is well established companies, mid cap is growing companies, and small cap is high growth but high risk companies. Why it matters? Market cap help investors understand a company's size, risk, and growth potential. So diversify by mixing all three types. Two ways of stock are traded. Stock are bought and sold in two market, primary and secondary. In the primary market, companies sell shares to the public for the first time. This is where IPOs happen. After IPO, shares are traded between investors in the secondary market like NSE or BSE. Key difference in the primary market, money goes to the company. In the secondary market, it goes from one investor to another. Face value and market value. Face value is the original price printed on a share, usually rupees 10 or rupees 100. It doesn't change. Market price is the current price. The stock trade at it changes daily based on demand and supply. Why the difference? A stock may have 10 rupees face value but trade at 1000 rupees in the market. Investors care more about market price and not the face value. Bonus shares are extra shares given by a company to existing shareholders for free. A stock split divides existing shares into smaller parts. For example, one share become 2 or 5 at a lower price. Why companies do this? To reward shareholders and make shares more affordable. Holding period. Holding period is the time you keep a stock before selling it. It affects how your profit are taxed. Short term and long term taxation. Short term means less than 1 year taxed at 15%. Long term is more than 1 year taxed at 10%. To save on tax, hold your stock longer if possible. Tips for investors: don't sell too quickly. Long term investing is not only build wealth, it will reduce tax burden too. There are more to a stock than just price. Follow at OMR Stock Insight to dive deeper into small, smart invest strategies.